Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Boris Schlossberg,
Hello. Good morning, everyone. This is Kathy. If you can hear my voice, see my screen, give me a big hello and let me know that everything is working. It's great to be back from vacation. I'm really happy to be back at my desk. As much as I love, being away and spending time with my family, but there's always the comfort of being back home and being back in my routine. So I'm very, very delighted to be here with all of you this morning. And I'm glad you can hear my voice, see my screen, and everything is working out properly. And also, I thank all of you for joining me earlier this morning. My poor son broke his arm right before we left for vacation, and he's got a doctor's appointment at 8:30 in the morning, which is in an hour. So we've got to do this a little early because I certainly want to share my views with you. Now, what's interesting to me is that not much has changed in the past week that I've gone. The US dollar was in a one-way downtrend, and it seems to be the mode that is happening. But before we get into it, I want to share with you this one picture that I took while I was on vacation. This picture, I don't know, can you see the name brand of the company whose bags are on the I guess, banister? Can anyone see that? It's Shein. Shein is one of the largest retailers in China that sells abroad online. They're kind of like Temu. They're very, very huge. And this is a picture that I took in Milan. And I think this is the quintessential example of, if you don't know this company, Cheryl, it's just one of the major online Chinese retailers that Americans, especially younger Americans, like to buy from. The point I want to make is that Shein was having a open door fashion show in Milan, and everyone was invited. And they would have a ton of giveaways. And I think this is an example of China doubling down and bypassing the US. This is an example of how they're trying to really focus on the markets abroad. And this has been really what appears to be the strategy for China. And I think I saw it firsthand. I saw, this Shein fashion show, which was open to everyone, was packed as an example of China and Chinese companies seeing that, there's very little hope in the US-China relations right now. And that the best strategy, and even their strategy before they, announced the increased, the reciprocal tariffs on the US, is to focus on business abroad. They believe that they could drum up enough business abroad, maybe not to completely offset US demand, but certainly to make up for a large part of the difference. So I found this fascinating that, just on my random walk in Milan, that I saw this Shein fashion show. And I think, as I said, this is an example of them doubling down their access abroad. So the US dollar, as I said, in the past week that I've gone, has continued to lose momentum. It has continued to fall in. And this morning, the greenback is trading at fresh record lows. Let me go ahead and share my chart with you. Give me 1 second. So the US dollar is trading at fresh record lows. Eurodollar in particular is trading at its highest level since 2022? It's 2021, actually, the highest level since 2021. Dollar yen is at its weakest level since, let me just remove this, its weakest level since September 2024. And gold has climbed to a fresh record high. So nothing really happened from the U.S. Well, I wouldn't say nothing really happened, but over the weekend, no new announcements were made by the U.S., but a new announcement was made by China. And, with China, what we had was basically number one, they ordered their state-owned funds to cut off investments into the U.S. So China continues to, push against the U.S. It doesn't seem like there's any type of conciliatory agreements being made. It doesn't seem like they're having any type of good conversations. And China, you can see this, China state-owned funds investment US. So basically, the latest news is that China has basically, I guess it's not here, but China has halted their funds from buying in the US. And they are coming in to support their market by buying their own stocks. And then on top of that, the other news is that China sanctioned. This is the big news today. Well, of course, it's not the biggest news today. The Pope's death is the biggest news today. But in the financial arena, it was an important story, which is that China sanctioned U.S. Congress members, officials, and heads of the non-NGOs, the nonprofit organizations. But this is kind of in reaction to the U.S. sanctioning six officials, high-level Chinese and Hong Kong officials at the beginning of April. So it took them some time. We're pretty much 3 weeks later, and they'd come back and sanctioned U.S. lawmakers, officials, and NGO leaders, which means that they've probably prevented these, because it basically prevents them from, entering China, from engaging in Chinese businesses, from investing in China. Now, they did not provide the list on who they are sanctioning, but it's tit for tat. The point that I'm making is that, there is no improvements in the conversations, negotiations between China and the U.S. It is only, the tensions are only intensifying and deepening, which is why U.S. stock markets continue to fall. And that is also why gold prices continue to climb to record highs. And you can see in the dollar index here that the US dollar index continues to drop. Let's just get rid of all of these indicators, all of these drawings, and you will see that the dollar index continues to fall to its lowest level since April of 2022. So we're starting this new trading week with ongoing US dollar weakness. And the thing here is that today is a holiday. We have, many European markets closed for an extended Easter holiday. And even with this holiday, there seems to be no relief in the US dollar sell-off. One of the greatest examples, in my opinion, is pound. Pound is trading higher for the 10th consecutive trading day. This is basically, I went back and looked at my charts, and I couldn't even find another period. Let me see, and let's see if we can find it quickly together. Without any type of pullback, this is 1, 2, 3, 4, 5. No, without any type of pullback, have we seen a period of strength? Maybe over here. Let's see, in around COVID. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So during COVID, we did have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So during COVID, we did have two periods. This period here, in pound dollar, and then also this period here in pound dollar, where we had 10 straight days of rallies. But it also stopped right at the 10th straight day. I don't think that we've had a period longer than 10 straight days of gains in my charts in the pound dollar. So it stopped after 10 straight days. Now, in June of 2020, it became a more significant top that led to pound dollar basically going from 128 down to 123.14. In July, though, it was a pause. It wasn't a reversal. It was a pause and a consolidation followed by a move to new highs. So if we look at today's chart, and we'll go look at it for a second, it's, we're thinking about, will it be like this or will it be like this? It's obviously very, very difficult to say, but that's when we really focus on the key levels and the key level breaks. So if we go back to current, this move, there's a very good chance we could get a pullback off of these levels because this move, this rally is coming right to these highs here in the British pound. So there's a good chance that maybe we can test this level and then pull back from here. Now, I'm showing you the pound dollar chart because I'm making the case that there could be a bounce in the dollar this week. First, we see it potentially technically in the pound dollar because, we've got 10 straight days of gains in the pound dollar. We're nearing resistance, and it could be a shallow pullback. It could be a deep pullback that we can't predict yet. But one way or the other, this move, may come to an end and lead to a pullback, either shallow or deep, temporary, or, a little bit more sustainable. Because we, usually pound dollar peaks out after 10 straight days of gains. And, this is the perfect level in many ways, the 2024 highs for it to really, this is the highest level that we've seen for it to really kind of peak out. So I do think there's a possibility that pound dollar could pull back from here this week. We also have the PMI reports this week. And that is the second reason why I think we could see a pullback in the greenback. Sorry, not a rebound in the greenback and a pullback in some of these high beta currencies. Because this week we have far less US data. We have the existing home sales report. We have the beige book report, which is kind of important. We also have the S&P PMIs. But it's really going to be about the PMI reports from other countries. So we get a chance to learn how bad it is in these other countries, in the Eurozone, in Australia, in Japan, in the UK. How bad have they been hurt by the U.S. tariffs, the market meltdown, the economic uncertainty? And I think there's a very good chance we see those PMIs drop, then in an environment where there's maybe very little U.S. market moving events. If we see that happen, then we could get a more consistent bounce in the dollar. That's not just against the British pound, but perhaps against dollar yen, perhaps against the euro dollar. If we look at dollar yen, let's see. Dollar yen is also coming towards support down here. I mean, the main support level is down here, which is 139. And really, that's not that far from now. 139 is only about 100 points. Now, what's one thing that's interesting about the dollar yen is unlike, I think we see this best with, our line chart. You can see, that unlike, well, I guess we don't see the wicks with the line chart, so it's not as helpful. But unlike euro dollar and pound dollar, for example, which likes to run for the round numbers like 140, you can see here, dollar yen right here. This is classic dollar yen. This candle, deep sell-off, stops right at 140, 20, sorry, let me just make sure I'm having my if candle, 140.25. Even here, the first attempt down It did get down to 140.28 and did pierce it a little bit, but it bounced off of it. So the difference here that, and the point I want to make, and you also see it to some degree here, which is that dollar yen doesn't always breach the round numbers easily. This is another example. Oftentimes it may test it and then pull back from it. So the point I want to make down here is that we're getting close to the 140 level. We'll probably come close to testing it, maybe down to 140.25, but it is also a prime level for a bounce in the dollar. So we see that in dollar yen, in euro dollar. Euro dollar, we have to go to much more longer term charts to see movements in the euro dollar. Let me just change this to something so I get rid of my arrows here. So we look at euro dollar here. You can see that euro dollar is had a very, very big move, and it is trading at its highest level since October 2021. And I don't think, I mean, there doesn't seem to be any obvious fibs, but let's see. And I know, you know, we don't always start talking about technicals, but I think technicals are kind of important here because there's nothing there, because we are getting to very, very overstretched levels in the dollar. And when we get to overstretched levels in the dollar, you know, price action sometimes can lead to a bit of a pullback. You know, it looks like here 117 from that fib is the resistance level in euro dollar. I'm just going to check one more level. I mean, the point I want to make is I already know that there isn't a lot of significant fibs for the euro dollar. So the euro dollar is a little bit of an outlier, but Eurozone PMIs could also be weaker because we did have all right, let me just get rid of, and accidentally, I've got a new mouse, so my, all right, let's just leave that alone. So the point that I want to make here is that with the euro dollar, trying to stop the replay here. I don't know why it's not letting me stop the replay. All right, we'll just go over to this chart. It's fine. This will be fine here. We'll just go back to the moving average chart here. And so the point that I want to make is that in a lot of these major currencies, we are on a technical basis getting so overstretched that we could see that we're at levels where we could see a bounce. Like Aussie's coming up against the 200 SMA. So that's, you know, potential area for resistance as well. And Kiwi dollar, we'll see Kiwi dollar hasn't had as much of a move. So that is the perspective from a technical basis. From a fundamental basis, the long-term view is really unchanged. And this is part of the reason why I think that even if we do have a bounce in the dollar this week, and I do think we could get a bounce because of data, that most likely it's going to invite more sellers than buyers because the dollar outlook hasn't changed. In order to have a more permanent recovery in the dollar, we need to see the market shed some of its fears about the outlook for the U.S. economy, the prospect of, you know, a lot of countries diversifying out of the U.S. and doing less trade of the U.S. and, you know, having a lot of that change. Now, there's one thing that could change that. The one thing that could change that is if the U.S. and Japan, who've been in very intensive negotiations, trade negotiations, suddenly announce that they have a trade deal. And, you know, if they suddenly announce that they have a trade deal, it could be a relief to the market and a relief that maybe trade deals could be had with other countries as well. And that could lead to a bit of a recovery in the dollar. Now, I can't predict that. It seems like it's moving in that direction, but that could bring a bit of relief to the stock market, pull back in gold, as well as relief in dollar yen and dollar Swiss and things like that. But for the time being, my outlook for the dollar is bearish. But my outlook for the euro and pound are also bearish, which is why I made the argument that we could potentially see the euro and the British pound pull back this week, that we could see a bounce in the greenback, because this week the main focus is going to be on the PMIs. If you look at the calendar and we look at the top events for the week, which just filter by just the highest events, you will see that the main highest events are all the PMIs, German PMIs, Eurozone PMIs, UK PMIs, US PMIs, which is a little less important than the ISMs. But we also have Australian PMIs, and we also have Japanese PMIs. So the PMIs are really the most important. And the PMIs measure how things are going on right now in the manufacturing and service sector. And I think there's a very good chance that a lot of these manufacturing and service sectors businesses are going to report weaker activity as they worry about, growth and tariffs and things like that. So if the PMIs come in lower, like the ZU last week for Germany, which came in lower, and we also have the IFO for Germany this week that came in lower, then there is a good possibility we could see a pullback in the euro and a pullback in the British pound. We also have Australian PMIs this week, which also I think could be weaker, but it seems like Australia is faring a lot better because, we had the improvement in the employment report last week where we did have a recovery in job growth. So that seems to have, improved things a little bit. But I am neutral, the Australian dollar. Now, in terms of the Canadian dollar, if you look, for our BK members, you can click this. Job growth weakened significantly, but inflation and retail sales data was stronger. Now, this week we have Canadian retail sales data again. That's one of the most important reports for Canada. And there's a possibility that we could, potentially get a little bit of a improvement in the Canadian retail sales report. But we'll have to see. It's a little bit hard to tell. But with Canada, we're neutral Canadian dollars. We're neutral New Zealand dollars. I'm still bullish the Japanese yen because, Japan, the data has been better. Household earnings and spending have been improving, and they seem to be, moving towards some sort of agreement with the U.S. But really the main focus and the point that I want to make this week is that the focus is going to be on the PMIs. If we expand the calendar to look at some other things, if we expand the calendar to look throughout the week, you will see that, first of all, it's a holiday in New Zealand, Australia. One of our friends here is asking about China and the yuan and how, China is keeping the value of its yuan low, which is true. If we put in, but they're not weakening it significantly enough, because if you look on a monthly chart, yes, the Chinese yuan is weaker. But given these type of trade tensions, they could have verticalized. It could have been much weaker. Like they could have really verticalized it, but they've kind of, limited the currency devaluation because, they don't necessarily, they don't necessarily want to, the Trump administration to use it as an argument against them. But I don't know if anyone's noticed, the euro Chinese yuan value, on the other hand, has for the most part also remained firm. So they're not necessarily using their currency at all this time. Instead, I think, maybe they're leaving their ammunition. Actually, no, this is the wrong chart. This is not, let's look at it again. Dollar CNY. And let's remove all these indicators so we're not distracted. But if we look at the dollar CNY chart, and let's look at it with a line chart, which is a little easier, you can see that, yes, it is hovering at low levels, but it could have been a lot lower. And so now let's pull up the Euro CNY chart to see if it shows the same thing. So the Euro CNY chart, on the other hand, this is what I want to see. The euro, the Chinese yuan, on the other hand, is very weak against the euro, the weakest level since May. So they've allowed the Chinese yuan to fall to its weakest levels since May. And if we look at the Chinese yuan, Japanese yen, also we've seen much more weakness in the Chinese yuan against the Japanese yen. So the point that I want to make is that they are allowing for the yuan to weaken against other countries to encourage demand from those other countries. And as a result, encouraging those demand from other countries while not really allowing too much movement in the dollar value is their goal. Their goal is what this image that I showed you from the very beginning. Their goal is to diversify. Their goal is to attract demand from other countries and to do everything in their power to, diversify from the U.S. and basically cut the U.S. out, which, is understandable given the huge penalties the U.S. has placed on Chinese cargo shipments. So, it's not going well. Someone here says the UK CPMI services is the most important. Manufacturing, yes, services PMI is the most important because manufacturing doesn't not make a large part of the economy. But in general, the PMIs are important. Today, we've got a holiday in a lot of countries. We have New Zealand trade data that is coming out on tonight. And the PMI from New Zealand was weaker, so that'll probably end up being weaker. We have a bunch of Federal Reserve officials speaking, which is always interesting. ECB President Lagarde speaking, very interesting how the euro continued to rally and didn't sell off after the ECB rate decision, after they cut interest rates, because the market thinks that the Fed's going to have to step up. We have a PMIs from Australia tomorrow night, and that's going to be very, very important as well. Japan also has PMIs. Wednesdays when we get the PMIs from the Eurozone. And as you can see here, the forecasts are for weaker numbers all around for the manufacturing and the service sectors for Germany, Eurozone, and the UK. The US has S&P PMIs, which are also expected to be weaker, but this tends to be less market moving than the ISM numbers. And then we have the Fed Beige Book. The Fed Beige Book is very important these days, similar to speeches by Powell, because they provide a more up-to-date look on the currency. Whereas it really gives us what's going on, as opposed to some of the numbers are kind of suspicious these days. So I think the Beige Book is going to err on the side of caution, reflect uncertainty and confidence weakness in businesses and consumers, and that may not be so good for the greenback. But I don't think it's going to change much, because Fed Chairman Powell has made it clear that they are not planning to cut interest rates in May, and that at earliest they'll probably cut interest rates in June or July. And then on Thursday, we have durable goods. Durable goods aren't always all important, but they are an input into GDP, and that could make it important. We also have the German IFO report, which will probably be weaker. And then we have some more holidays in New Zealand and Australia. Then we have the Japanese inflation data, which is going to be stronger. That's very, very important. Tokyo inflation data is very important. We also have retail sales data from Canada. And so that's going to be significant as well, because we did have weaker job growth. So and we also have UK retail sales data. Did that get moved? Yeah, no, UK retail sales data, and that's probably going to be weaker as well. So that's another reason why pound could pull back this week and the rally will run out of steam. So these are all things to look out for. Now, in terms of the charts, Mark asks, so how would you trade if you're bullish one and bearish the other vis-a-vis in a heat map? I mean, sometimes I'm bearish one and bearish the other as well. So really, when I'm bullish one and I'm bearish the other, let's say I'm bearish pound and bullish yen, then I probably looked for opportunities to sell pound yen. And I think, there could be opportunities to sell pound yen. This looks quite bearish. But if I'm bearish euros, for example, and also bearish euro and US dollar, which I think is a very good question, then it really, then it means that it's free for all. We wait to see. Obviously, we would not be selling a candle like this. I'm always a proponent of selling weakness, not strength. So we would be waiting for euro dollar to show weakness, to reverse, and then start selling it. Now, pound dollar obviously looks like a better sell than euro, but that's only because it's so much more overextended. But as I said, euro dollar resistance is up at 117. We looked at some fibs earlier in euro dollar. Dollar yen support. We had also looked at dollar yen support Dollar yen support is at these lows over here, which is first at 140 and then 139.60 is where dollar yen support is. Dollar Swiss also deeply oversold. With dollar Swiss, the next support level for dollar Swiss really isn't until 78.40. That's the next support level. But, it could rebound. It could retrace. It just needs a catalyst to do so. Dollar CAD. Now, dollar CAD is not as overextended as some of the other major currencies. It's, not at significant lows, but this is a daily chart. We do have some support in dollar CAD at this level here, 137.40. Right now, all the charts tell me that the downtrend still remains intact. But once we get except for maybe Aussie dollar, which is nearing resistance, the downtrend in the dollar remains intact, but we're getting very overextended. And at the end with this week, there's no, tariff deadline date. Maybe, in respect for the Pope passing away, maybe Trump won't announce, new tariffs, and you get more antagonistic this week. I don't know. But this could be a week where we could see a little bit of a bounce in the dollar. And that, I guess, is the case that I'm trying to make today. So hopefully that kind of makes sense. I like to take some quick questions. I do have to pop out because we're doing this early because I have to take my son to the doctor this morning. But any quick questions, you can always ask me questions. Also, in our community, please join our free community. There's lots of really great stuff there. It's community.bktraders.com. It's a free community. You can ask Kathy, ask Boris. I'm more than happy to answer your questions there, or drop me some questions underneath the YouTube video or in X. I'd be more than happy to answer your questions there as well. So please, ask any questions that you may have. Boris will be talking about Dow, gold, and stocks and live trading later this morning. So make sure that you join him. I think that it should be on our YouTube channel. I think it should be on our YouTube channel, his next session. So please join him. He's going to be streaming at his regular time at 9:15 this morning. So at 9:15, Boris is going to be streaming. So please join him to trade the New York Open. What do you think will happen to the U.S. economy at the end if it's just 10% tariffs for all? Normally, 10% tariffs for all would be terrible, right? But because we've been through the ringer and been through worse numbers, I think the market would see this as a relief, which, for better or worse, could bring some stability to the markets. Euro Aussie, I love trading the crosses, as you all may know. Right now, Euro Aussie looks quite bullish. We're finally above the 5 SMA. I do like to look at this 5 SMA. It does look like it could go up to 180, above 180, which is where near-term resistance is, up to 182. This is actually a very positive candle for me. It does look very positive, right? All right, any other questions? I do have to go. I'm sorry, but as I said, feel free to ask me questions through all of the channels I have. I'll take a look at it later. Even in the comment section of this video, that's a really good place. I hope, you found value in today's session, and I apologize for it being shorter than normal, but, I'll see you in the markets.